The Federal Reserve made history yesterday by raising interest rates 3/4 of a point for the third consecutive time. So what exactly does that mean to you and your family? Joining us this morning to explain is Rusty Rasmussen, Senior Vice President of Central Pacific Bank's Home Loans Division. Good morning, Rusty. How are you doing this morning?
Good morning. Doing great.
Now, first off, can you explain in layman's terms what happened in yesterday's meeting and how does it impact people? Because why do they keep raising interest rates?
Well, the Fed is trying to control inflation, and the rates have been pretty dramatic. This is the fifth rate hike this year, and that adds up to 3% in hikes. So earlier in the year, the rates were at 3% for mortgages, and now they're at 6%. So the Fed is definitely trying to curb inflation by hiking these rates. They announced yesterday that they're going to keep hiking the rate, so we expect one more hike this year and this kind of rate environment for a while.
Now, prospective home buyers probably aren't too thrilled with this move. How will this interest rate hike affect the housing market as a whole?
Well, we've had a chance to observe how the market reacts so far this year with all of these hikes. And what we're seeing is the market was so hot that we're seeing it cool a little bit, coming down to a more normal real estate market. And we expect that will continue, this normalization.
Now, what about someone who really wants to buy a house that they love? Can they still buy it and refinance later when the rates drop?
Yes, definitely. Rates do go up and down. So people typically don't buy a home just because of the rates. It's usually some life event. So they can certainly buy at these higher rates. They'll have a higher monthly payment and can look at refinancing later. And there are a number of other alternative programs that can reduce that payment for the beginning of the loan and help them to get into that home.
Now, overall, how will Hawaii residents and families be impacted by this interest rate hike?
Well, I think, first of all, the opportunity to refinance and take equity out is going to be a little more expensive. The other thing is that if you plan on buying, you might have to adjust your budget to these higher interest rates. And we can expect it for a little while. So looking ahead as they come down, there's all kinds of opportunities to adjust.
Is that why more people maybe are looking at condos versus buying homes because it's a little cheaper?
Yes, yes. So you'll see people putting a little more down payment to get that payment down to make the adjustment, or looking at a home that's a little bit lower in price.
And basically, it's important to work with a lender that can kind of tell you about all the different options available.
Oh, yeah. Talk to a lender, talk to your realtor. That's the most important thing.
I guess one of the silver linings is that your savings account will be earning more interest, right?
That's true. That's true. And, it might be a little bit easier for buyers going forward to get an offer accepted.
All right, there you have it. Rusty, thank you so much for joining us this morning, because a lot of people are wondering, how does it impact me? I hear about it. They keep raising interest rates, and you expect another one by the end of the year.
Right, right.
All right, there you have it. Thank you so much for joining us.
Thank you. Thank you so much, Roth.